down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
What's going on, Savvy investors? Bang, bang. This is your friend Steve VanCauwenbergh, a.k.a. the Savvy Somebody, Savvy Landlord, Savvy Investor, with an S, investors, team around me, people, party, let's do this. It's about time for a real estate podcast. I know I've been in personal development for a while, little season, still grinding it out, still reading every day, loving it, enjoying it, bang, bang. Hopefully you are as well. Hopefully that you do enjoy these podcasts. Thank you for ladies and gents that have encouraged me on the new book release. I'm excited. Be the Bank. If you ever wondered how to borrow money or how to get money or how to loan money, I recommend the book right now. Banks are collapsing. And the book, perfect timing. It's definitely all kudos to GOD. It wouldn't have happened. It was a long process, and I'm glad that it's published. It's actually probably one of my best works. So if you haven't heard about Be the Bank by Steve VanCauwenbergh, that's me. Bang, bang. I'm the author. It's real down and dirty, real simple, real to the point. Real case studies from Ohio, Oklahoma, all over the place. You should be inspired that you can do it. That's the whole goal. That's the goal of this podcast. In general, you tuned in. That's right, to the Savvy Radio Show. Enough of me. Yeah, cough it out. And so this isn't a unique podcast. It is based on real life, what I'm in the middle of, transitioning. You know, when to sell, when to keep, and especially when it's a unique asset. So I'm going to break it down. I'm going to, this is really not scripted, meaning I just wrote down some notes and so I really don't know what I'm about to say, but I hope that it will inspire you to go to the level you want to be at. Not the next level, but maybe in a transition, maybe get out of real estate altogether and move into entrepreneur endeavors. You know, that's been on my forefront of my mind, especially interest rates, banks bailing. It's going to get real sticky here pretty soon. There will be deals, but can you finance them? And obviously that's why I wrote the private lending book. But let's forget all that jazz. So this is a house. Let me tell you what it is. It's a 3-bedroom, 1 bath. It is 1,748 square foot. The house was built, in 1920. So it's an older house. Now, I was very fortunate to buy this house. I bought this house in 2014. And during that time, it was a foreclosure. A bank, a small, tiny bank outside of Oklahoma City, had the loan on the bank, had the loan on it, threw it on the MLS. And I can't remember the exact amount that it was listed for, but they were pissed off that I offered $15,000. And that's okay. But at that time, and how I made that offer is like I always build the case. And so I remember vividly, and I have these notes of, what was wrong, the complete due diligence I did on the property, the reason why that I'm offering this like money. And I'm assuming they wanted 25 or 35 at the time. Now, this is on the east side of Oklahoma City, which back then in 2014, it wasn't the most desirable. It hasn't been the most desirable. Excuse me. So now it's one of the hottest areas in Oklahoma City. Pretty fortunate. Yes, over time, take risks and you get returns. Here's the situation on this property. I bought it for $15,000. At that time, I probably did a $25,000, $30,000 rehab and some maintenance over there. It's been rented probably 90% of the time. Anytime that it ever comes up, it's usually rented within the next couple of weeks or the next cycle. It is right by OU Medical Center on the east side of Oklahoma City, near Northeast 10th. So if you're in Oklahoma City, you know exactly what I'm talking about. And that location, I wrote down here on my little notes, fire. It is fire. It is one of the hottest desirable areas. And so what I recommend when you start to figure out what should you do with the property, should you hold it? Should you keep it? Should you sell it? What's the cycle? Of course, all these things go through your mind, and it's natural, right? It's natural not to know everything about real estate. And so what I did and what I recommend you to do, first of all, you should write out every detail of something that you're thinking about. Like if you're having a problem with a business situation, you need to write it out. If you can't make a decision, if it's not pretty obvious to you, write it out. And on top of that, what you really need to do is get with someone else, another real estate investor. And I got with another real estate investor, and I was going to go over there and take a look at it. It's been rented since 2014, pretty on fire. And the property manager contacted me, hey, we got a 30-day notice on this. I'm like, great. They're going to move out. Wonderful. At the end of the month, super duper. Hey, I will look at the pictures. So, but my first fleshful thing was it's in the hottest area. Scrape it. Boom. You can move on. But what I realized, what I did was I had to slow down, and I called another investor. We sat down, and I wrote out this little piece of paper. And so I recommend that you do the same. First of all, the corner lot right around the corner sold in 2022. So it's 2022 in April. So not that long ago, a year ago, for $60,000. So that is the basis points of realizing what the actual value is. And this is going to come into play here in a minute. And then you pull comps. So, then before you pull comps, you kind of really realize, what are you trying to do as an investor? What is your goals? If your goals are to acquire as many single family homes as possible, then it probably wouldn't be advantageous for you to sell the property. And my personal goals are not necessarily real estate anymore and not necessarily single family. So I kind of set a guide in my own little business matrix. It's got to be $150,000 asset value. It was 100, but everything's increased. Time is money, so I've increased it to 150. And what will there be equity in it? So these are just my matrix, my parameters of what investments I'm looking for in single family. It's got to be 150, 3-bedroom, 2-bath, location, accessibility, and at least $1,500 to $2,000 a month of rent. That's what I'm trying to get to. So let me break this deal down to you. So I've owned it since 2014. It's been rented out 9 times. I made a ton of money on the deal. So at this point in time, I'm like, okay, here's the interesting thing. 2 houses over, boom, brand new, scraped, $418,000 monster 2-story modern property sold in September of 2022. Wow. Another one, a ton of them, 5 to 10 houses have been scraped and rebuilt and sold. Now, this is interesting. So these are just good data points that you need to know when you're making a good decision. I think the most important thing as a young CEO or CEO in general or business person or whatever the heck you want to call yourself, you got to operate from what? The facts. The facts are the most important thing. There's no speculation in real estate. I don't hope to make money. My goal is will make money. Not hope, but will make money. And I have to make those sound decisions. So number one, then I wrote out these options, and I only wrote out 5 options. Number one, low grade rehab, which I did get a bid from a contractor, kind of a low grade contractor, and he quoted me $30,000 in rehab, which was overpriced for his work, but that's okay. But let's just say I put in $35,000 cash, okay, on top of what I already have in it, and I can yield $1,100 in rental. That's pretty good. Now, the exterior needs some attention, probably in a 1920 house. There's probably some fix-up that needs to happen on the foundation. And over time, okay, there's a lot of problems. But let's just say number one, option number 1A, low grade, rehab, $35,000. It would yield $1,100 a month rent. Bang. So it's been cash flowing like a machine, $80,000 into it. It would take me 3 months to get that done, probably 60, 70 days, maybe 45 days, and then I'm renting it out. Bang, bang. Number 1B, raise up my style a little bit, put $50,000 in it, pump it up, and maybe sell it The ARV I could probably get. Now, this is before I contacted a realtor, before I shared this with anybody else. These are just my own notes, okay? So I could sell it. I could put $50,000 in it and sell it for $250,000. That's ARV. But then I'm going to have to do repairs, holding costs, and a bunch of drama, and first-time buyer, and the market. Number 2, which would be 2 or 3, whatever you want to say. Next level rehab. Put $100,000 in it, hire a GC, and sell the bad boy for $400,000. I'd have to get drawings, move some walls, plan on 6 months of holding costs. Plus, it's a risk of throwing money, and it's not guaranteed. And in life, it's not guaranteed, but as an investor and you've been around a long time, you kind of know what you can do and cannot do and what risk is and what risk is not. Right now, most successful investors are not buying. It's not guaranteed, I guess. It's a risk. Number 3, scrape it, build my own investment on it. And then I got to hold it, buy and hold. Build a duplex on it. Probably cost me about $250,000 to do a duplex on it. So then roughly I got about $300,000 in it. I can rent it out for what? Maybe $1,500 a side. That's about $3,000. Maybe $2,400, $1,200 a side. $250,000 investment. Holding cost. I don't know. Build it, rent it, sell it. $400,000. Okay, so there's some value there. I could build it for $250,000. But I have to hold it, mess with people, maybe owner finance it to somebody. The market, the interest rates are high right now. That would yield $150,000 worth of profits. Okay. I can dump it and sell it for $125,000. The next door sold for $88,000. These are just my own personal comps. I don't have MLS. This is just me doing some research. Number 5, I can also possibly get a partner, split it with this person. They run the whole rehab. Maybe they put in the $200,000 cash. I got $200,000 in it, let's say. I don't know. And I would yield about $150,000. Okay. So after this quick analysis, then after I write these 5 options down, 6 options technically, I would contact a realtor. That would be my next move. So my next move is I contact the realtor. Dear realtor, I'm thinking about selling blank address. And the reason why I'm not giving you the address right now, it's for sale. So it's just like, I don't want anybody, messing around with this situation. But you know what I'm saying? But hey, if you're interested, you want to message me, I have no problem sharing the address to you. Just putting it on the internet, smash and grabs, you feel me? But I message a realtor, hey, I need a comp as is. I need a comp as a little make-ready rental. I need a comp as a high-end retail rehab sale. So this incredible realtor gets right back to me fast. He goes, comps as is, $150,000 to $175,000. The house next door sold for $144,000 in 2021. So my numbers were way off, right? Next door comp I found was $88,000. Comp as little make-ready, $175,000 to $25,000. $175,000 to $200,000. Now, in my mind, I would have to stick probably $25,000 in it, $30,000 in it, and then a high-end comp, roughly $250,000 to $300,000. Here's the cool thing about this is that I'm really been out of the real estate game on a full-time basis on single family for a couple of years now, but just being trained for the last 20 years, knowing this stuff, it was pretty close to what my realtor brought to me. Exciting. All right. So let's recap, and then I'm going to say what I did or what I'm doing and blah, blah, blah. So it's interesting, that it's a 1920s house, 3-bedroom, 1 bath, 1,748 square foot, 1,748. I have 45,000 total in it. It's been rented 100% of the time, roughly 95 to 100%. The location is incredible. The corner lot's got to be worth over 60 to 80 probably. New builds are going crazy in that neighborhood. So after all this analysis, I decided to sell it. Interesting. Now, let me tell you what this homeboy, this dude that I'm working with, one of my clients right now, meaning student, somebody I coach, somebody that's in real estate that hired me to teach them real estate. He goes, hey, man, I would love to download more about this and give you a call. If it were my property, I would have a tough time justifying a nice remodel given the current market conditions. Way to go, stud. He said, if it were a year ago, maybe I'd just be too nervous doing it right now. Interesting. As you know, the ones that age have terrible foundations, rot, and all kinds of structural challenges. Woo, he was on fire. Seems like a good one to try to sell to an investor. Just seems like an aggressive price. You guys put it on it. You never know who would pay that, though. Or fix it up to rent, but again, you have some pretty significant challenges to do so. Bulldozing it and building new seems tough on that one too, mostly because of the $400,000 price range. Just makes the margins tough to build something and actually make any money. Plus, you will literally have a good bit of theft going on with building material, which be a challenge and consistently with this deal. I hope it doesn't sound negative, but these are just my thoughts. Dude, that dude was fire. First of all, after I analyzed this deal with a good friend, I didn't drive over there. I just leveraged other people's mind. And this is one thing my homeboy, my student here told me. He's like, you're going to have to be challenges with theft. And I didn't think about that. I was just read an article the other day. This builder in Tulsa had his Bobcat stolen. And he's like, the police will not help me. I've been begging the police to patrol this. And the article was like, no one's out there helping me. And my building materials are getting stolen. My equipment's getting stolen. It's rough out there. Isn't that interesting? So with all this natural data, it didn't take me long. I didn't get in the car. I didn't in the truck. I didn't drive over there. I didn't stress about it. Now remember, I know it is leveraged. It isn't a package of assets that I have. So that's only one concern that I have. If I do sell it, so I put it on the MLS for $169.9, and as soon as I put it on there, one of those famous wholesalers tried to make me a $10,000 less offer. It's hysterical. So, but anyway, I've gotten some decent traffic as of today. So middle of March. And so I'm curious to see how this shakes out. But the great thing is when you have data and you know what your goals and aspirations are, you can make sound decisions. And so hopefully this podcast will encourage you and help you. Hey, get with somebody that you trust and run this deal by them. They may be even interested. Hey, I sent it to the one of my students. He does really good rehabs. This could be his thing. This wasn't his thing. That's okay. So it's on the MLS. My goal, though, for me personally, now this may not be your goal. Your goal may be a builder right now, a grower, growing your portfolio. And this might be an ideal. You can lock it up, do the work yourself, maybe spend $5,000 in material, no more than $10,000 in material. Do some sweat equity and rent this bad boy out for $1,200 to $1,000, $1,100 a month, and it would be a good cash flowing machine. Maybe if you got a good loan on it, I don't know. It's interesting. So, but for me, what I'm trying to do, what I'm trying to accomplish, it's just doesn't fit my wheelhouse. And so for that, as Shark Tank or what the guy says, for me, I'm out. So that's it. Hopefully, something I said to you will encourage you. If you want to reach out, go to savvyinvestors.com and message me. Or if you have a question, if you're interested in this deal, if you're out of state, this could be a long-term buy and hold. You could depreciate this thing, accelerate it. You got, this year you can close on it. It's probably accelerate the whole deal as an asset or close to it and move on to the next asset. Hold on to it till the market keeps continuing to grow. The area is not going to die, because there are $400,000 houses all over the place. So even if you bought it, sat on it, rented it out, and then scraped it, you still would do okay over time. It would be a long-term play. But for you as an investor, it might be great. Or you have a ton of cash and you want to park it there. For me, I'm not in a hurry to sell. It could sell, great. If it doesn't sell, I'm going to wait 3 to 6 months. After 3 to 6 months, 3 months, I'll come in and check in. I'm not going to think about it. 3 months, I'm going to put it on my calendar. I'm like, oh yeah, what about that house? What should I do? Boom. Fix it up, throw some lipstick on it, maybe rent it out. If that doesn't work, then I'll come up with another plan, maybe lower it, figure it out, gut it out, pimp it out, whatever. But the great thing about real estate, hopefully you got from this message, is the simple one. There's options. I think that's the great thing. In stocks, there's no options. Either buy, hold, sell, lose, whatever. In real estate, I can hold on to it for a while. I'm still get depreciation. I can write off some of the losses if I did have a loss. There's so many options. That's what's so beautiful about real estate. If you're not in real estate, you need to get into it. Anyway, my name is Stephen VanCauwenbergh. Hopefully this inspired you in some way. Hopefully you can take a different approach. But the one thing that you should definitely learn from this process is write it down. I know I'm about to turn 50 this year, and I'm just now really slowing down, really writing out what I'm thinking about, and really kind of create a plan, and then run that plan by other sophisticated investors and get their input, and then make a sound decision. Go buy assets and go make sound decisions.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook, and always be buying assets.